Let's talk here about the market, which has been kind of going back and forth, hopes that the economy is going to pick up and have a fresh leg versus all the tech stuff we've been relying on. Which here is the major force for markets, you think, at this juncture?
Well, from a NVIDIA standpoint, my belief is that they're waiting for the Blackwell to be released, which is the next generation chip. If you look at the history of when they released Hopper, which was in September 2022, the stock was either down or sideways for prior to that. And then once they released it, the stock went up hundreds of percent. So I see the same thing happening with Blackwell. The market is waiting for the Blackwell chip to be released. Hopefully in the fourth quarter. If that happens, you're going to see a huge explosion of the stock in 2025. But my view, which is that NVIDIA will be 800 by 2030, has more to do than just one chip. It has to do with the fact that there's an AI revolution and we're only in the first inning. And actually, more important, we're migrating from Web 2 to Web 3, which Goldman Sachs, Morgan Stanley, and Citibank estimates it will be a $10 trillion transition in the market. So NVIDIA powers all of the accelerated computing to make that happen, so they're going to have a major share of that.
When you look at where we are right now, we've seen all these hyperscalers spend billions upon billions. Microsoft's reserving 20 years of nuclear energy. Does any of this risk overspending in the short term? What kind of benchmarks will AI developments need to hit to sustain that trend, to justify it?
I know everybody talks about that the NVIDIA revenue, 40% of it is with the 4 or 5 hyperscalers.
Right.
But that's actually the best case for why it's actually going to go up. Because if you look at all the other customers they're not getting to, there's 490 other Fortune 500 firms that haven't really adopted AI to the fullest because they don't understand it. You have all the cities and governments that are going to be redoing all of their infrastructure from Web 2 to Web 3. And then you have an AI arms race with countries and their militaries that NVIDIA hasn't penetrated for the most part. You're going to end up seeing that piece end up being a bigger part in the future for NVIDIA revenue. So my point is, you can see that the stock can go to the moon, essentially, provided they deliver.
In its key to 2024 investor letter, Columbia Contrarian Core Fund made the following statements about NVIDIA Corporation. NVIDIA kept up its ascent after releasing first quarter earnings in May that showed record revenue growth of 262% year over year. Following a 10-for-1 forward stock split, the company's shares started trading on a split-adjusted basis on June 10, granting employees and investors equal access to stock ownership. The company officially overtook Microsoft in market capitalization in less than a week, making it the most valuable publicly traded company, a status it would eventually lose. NVIDIA stands out as the clear leader in the field and is unlikely to be challenged for many years to come, even if other businesses have also stood to gain from the artificial intelligence, AI, trend this year. Demand for NVIDIA is still incredibly high, and the launch of the Blackwell system recently seems to be the start of an exciting new chapter in the company's growth. On our list of the 31 most popular stocks among hedge funds, NVIDIA is ranked 5th. Our database shows that at the end of the second quarter, 179 hedge fund portfolios held NVIDIA, up from 186 the previous quarter. Although NVIDIA has potential as an investment, we are more certain that AI stocks have a larger potential to yield higher profits in a shorter amount of time. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Chips.
This, I mean, you're not talking after any splits or anything, right? We're just saying a clean $800, gonna 6x basically.
Yeah, well, just so you know, when I was on last, it was 800, and I had said it was going to go to 8,000. It's split, now it's down. So I'm doing the math again, it's 800. So it's very simple. So I'm keeping the same multiples, but I'll actually take you through the math.
Yeah,
when I was here at the last, the last time, their revenues for the year was around 60 billion. we're basically saying they're going to go from 60 billion to 600 billion by 2030. And if you look at the multiple on that, that will grow around 10 times. If you look at the e-commerce cycle to the AI revolutionary cycle, it's about the same way. So if you look at Amazon, they were a $60 stock with 10 billion in revenue in 2005, and they grew to 100 billion by 2015, and their stock went to 600. So we're looking at about the same thing for NVIDIA. We're saying the stock's at 80, and it will go to 800, and the revenue will go from 600 billion to 60 billion to 600 billion. So you can see there's a lot of thought gone through with this prediction. But just so you know, not to sound overconfident, it's actually inevitable, provided they can continue to make these chips, because the AI penetration in the economy right now is literally less than 1%. So you still have all the corporates, the cities, the municipalities, the governments, the militaries that are going to be spending money to make sure that they leverage AI effectively. So tons of money still to be spent.
When a stock declines, it's better to remain calm. Following a sharp increase earlier in the week, NVIDIA had a modest decrease in trading early on Friday. That is how things usually work. Less volume indicated that the stock is simply taking a break following its recent surge. This week, the stock of NVIDIA has broken through several trendline entries. The stock moved from being 3% below to 6% above its 50-day moving average in just over a week. As of Thursday's closing price, shares are just 13% below their split-adjusted all-time high of 140.76, following a weekly increase of 7%. Following the release of earnings by memory chip manufacturer Micron MU and the mention of strong demand for AI, NVIDIA's stock has also re-entered the $3 trillion market value club. The semiconductor industry gained from the news. Investing in equities at the appropriate time will surely boost returns. It's difficult to determine whether to purchase or sell NVIDIA's stock at this time, despite the company being the clear market leader. Investors may determine if NVIDIA stock is a good investment at this time by looking at chart signals and a number of technical indicators. The consulting firm Bain predicted that the overall addressable market for artificial intelligence software and technology will increase by 40% to 55% over the course of the next 3 years, which caused shares to rise on Wednesday. Compared to 1.5 million H100 units in 2023, 3 million GB200 graphics processor units are anticipated to be in demand by 2026 from NVIDIA. After a little decline last week, shares are now rising. Barron's reports that NVIDIA lost its position as the top-performing S&P 500 stock of the year last week. As of Monday's closing price, Vistra had gained 190% year-to-date, while NVIDIA had gained 135%. Melius research analysts also offered the stock a buy rating and a price target of 165 on Tuesday, citing the company's impending increase in Blackwell chip manufacturing in the fourth quarter. Following the announcement on Monday that Alibaba, the massive Chinese e-commerce company, will work with NVIDIA to advance autonomous driving technology for Chinese EV manufacturers, many of which are Tesla's competitors, NVIDIA's stock price surged. NVIDIA's drive technology for autonomous vehicles is now linked with Alibaba's large language model portfolio. The news that Jensen Huang and Sam Altman, the CEOs of NVIDIA and OpenAI, met with White House officials to discuss spending on AI infrastructure earlier this month caused shares to rise above the 50-day moving average. Executives from Microsoft, Amazon.com, and Alphabet were reportedly also there. An interagency task force was announced by the White House to expedite the approval process for data center establishment. News that businesses might be branching out and searching for processors other than NVIDIA's, however, probably put pressure on NVIDIA's shares. Barron's reports that the Saudi oil giant Aramco intends to use chips manufactured by a startup called Grok to provide local businesses with AI processing capacity. The announcement followed Huang's statement that developers may use these devices to train, fine-tune, guard, and so on because infrastructure players like us and all cloud service providers put the infrastructure in the cloud. This meant that the return on investment for artificial intelligence infrastructure plays like NVIDIA remained strong. Analysts at Bernstein stated that while NVIDIA's durability remains the primary concern following its extraordinary rise, the time to worry is clearly not now. Other AI leaders' outcomes have affected the stock. Oracle data indicated a high level of interest in AI chips. Larry Ellison, the company's chairman and chief technology officer, claims that Oracle is constructing a data center with acres of NVIDIA GPU clusters to train AI models with a large language space. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
NVIDIA CEO Jensen Huang speaking at the Bipartisan Policy Center in Washington, D.C. this hour. Let's get to Seema Modi. She's got the key takeaways. He's talking a lot, and we monitor everything he says.
He really is. And the topic of this conversation, something that you like to talk about, AI and the scarcity of power. This discussion was in D.C. NVIDIA CEO Jensen Huang acknowledged the strain of the AI boom on the grid and explained that before the industry uses AI, the teaching or training process consumes a lot of energy because there is a lot of trial and error, but he also expects demand for power to only increase over time. Listen in.
These data centers could consume today maybe 100 megawatts, and in the future it'll probably be several, 10 times, 20 times more than that. It doesn't have to necessarily be built in one place, but the amount of data that we're going to train it with, and these AI models are going to use synthetic data.
Huang said to accommodate this increase in demand, the industry needs to do a couple things: rely more on renewable energy, build data centers closer to energy sources, and demystify the importance of AI to policymakers, and partner with governments to tackle this power issue and get better at using smart grids as a central command center to dispatch energy more efficiently. On that note, one of the beneficiaries not mentioned in this chat but is getting more attention on Wall Street is GE Vernova. It hit a new high just yesterday and now up over 80% since spinning off from General Electric in April. Of course, specializes in smart grids. Back to NVIDIA. You were mentioning that media tour, David. Huang has been very public in the last couple of weeks since the company reported disappointing earnings on August 28th. Speaking at Goldman's Communacopia, Dreamforce, and now today in D.C., it has coincided with a strong rebound in NVIDIA shares, up about 12% since early September. The broader semiconductor ETF up about 10% since this month. And that China stimulus helping this sector, too. They've got that exposure, Sarah.
Taking full advantage of the stock market and investing with confidence are common aspirations for all investors, regardless of age or expertise. A lot of investors also use a preferred technique to help them make purchase and sell decisions. Using the style scores, which are indicators that score stocks based on 3 popular investment types: value, growth, and momentum, is one way to identify winning stocks based on your favorite investing strategy. Following the adage, "the trend is your friend," momentum investors are primarily focused on capitalizing on upward or downward trends in a stock's price or earnings forecast. The Momentum Style Score can assist in identifying advantageous moments to purchase high-momentum stocks by utilizing a variety of metrics, including the one-week price movement and the monthly percentage change in earnings forecasts. The creator of the Graphic Processing Unit, or GPU, NVIDIA Corporation, is a global pioneer in visual computer technologies. The business currently focuses on artificial intelligence, AI-based solutions that support gaming, virtual reality, VR, and high-performance computing, HPC platforms instead of PC graphics. NVIDIA has a rank number 3, hold rating, an A Momentum Style Score, and a VGM score. Recent price behavior in NVIDIA shares has been fascinating. The company has increased 5.2% over the last week and 5.5% over the last 4 weeks. And NVIDIA has increased by 187.9% over the past year. In terms of trading volume during the last 20 days, an average of 305,420,000 shares were exchanged for the stock. For momentum investors, a company's profits performance is also crucial. In the past 60 days, 13 analysts have raised their estimates for NVIDIA's fiscal 2025 earnings, and the Zacks consensus estimate has gone up $0.12 to $2.81 per share. NVIDIA has demonstrated a 12.7% average earnings surprise. For their portfolios, investors have to give NVIDIA some thought because of its strong ranks, noteworthy earnings measures, and outstanding momentum and VGM-style scores.